Hello and welcome to Smartkarma's corporate webinar. I'm Xining from Smartkarma. This week we are hosting BHG Retail REIT. We are glad to have with us Chief Executive Officer Ms. Iz-Lynn. We will start the webinar with Iz-Lynn walking us through a company presentation, after which she will engage in a Fireside Chat with Smartkarma Insight Provider. We are taking live Q&As. I would like to request our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, I will also share some links on how you can connect with BHG Retail REIT and read more research by Osbert. So please keep a lookout for messages in the chat box. I now hand it over to Iz-Lynn to walk us through a short company presentation. Iz-Lynn, please.
Thanks very much, Sanam, and a very good evening, ladies and gentlemen, and thank you very much for taking time to attend the webinar this evening. Between myself and our Investor Relations Manager, Xian Hao, will take you through the presentation that we've prepared specially for you this evening. Our presentation will take us through three main portions: the overview of BHG Retail REIT, investment overview, and also our plans looking forward. I'll start off with a brief introduction about BHG Retail REIT and a little bit of our history. We listed on the main board on SGX on 11 December 2015, and we were the first Chinese-sponsored REIT to list. And as we know, since then, a few others have come along as well, so that's good. And we have 6 properties in total with a valuation of AUM 4.7 billion RMB. On the right-hand side, you will see on top, those in pink are 4 multi-tenanted malls. They are in cities like Beijing, Chengdu, and 2 malls in Hefei, which is the capital of the Anhui province, located about 1.5 hours from Shanghai. So these 4 are multi-tenanted malls. And at the bottom, you have Xining and Dalian. And these are smaller properties, and they are master leased to our supermarket. So that gives us 6 properties in total, all located in China. And on the left, you can see the map, depicting where these cities are in China. Next, I'll go into our investment position. So we have strategy, quality, and growth. In terms of strategy, we are one-stop destination malls. So these are basically suburban malls or community malls, some call it. So basically, we're typically located in high-density residential neighborhoods. So we have recurring visitorships that's coming in. So for those of you in Singapore, to visualize it, you can imagine something like a Tampines Mall or a Jurong Point, where you have your very typical, like you have your cinemas upstairs, your supermarket at the basement, and then you have lots of F&Bs, and you have your adult or children education and entertainment as well. So that's kind of and of course some retail, of course, right, and the fast fashion. So that's a very typical makeup of the tenants that we have. So basically, people who come to our malls do not just come like once or twice a month, but they could come to our mall maybe 4 or 5 times a week. So you can imagine the nearest neighborhood mall that you have closer to where you live and how often you go to that mall. So you can imagine that that's the kind of mall that we actually have. And of course, this sort of malls currently are sort of capitalizing on the rising China residents' income and also consumption upgrade as well. In terms of quality of the REIT, we have a strong track record of healthy occupancy rate and rental growth. We'll see later in some of the slides we're going to show you later. Strong and prudent capital management. We have a financially strong and committed sponsor group, which is coincidentally a retail conglomerate with very extensive networks that we can actually leverage on as a whole. And last but not least, there is a growth story. So back in 2019, we acquired Hefei Changjiang Xilu Mall, and that is actually from our sponsor group. And at the same time, we do have a visible and substantial sponsor pipeline as well that we can leverage on as we grow. Another thing that we pride ourselves in, ourselves and our property manager onshore as well, is that we've been doing a lot of continual asset enhancements to improve and to enhance our properties so as to ultimately bring in higher rental income as well. Next, I'll share a little bit more about our sponsor group, the Beijing Hualien Group, which is headquartered out of Beijing. So under the group, there are a few different business units. On the left side, you see here in pink, is actually our sponsor. So the sponsor for BHG Retail REIT is actually themselves listed on the Shenzhen Stock Exchange. And they actually, manage more than 30 malls around China. And that was also, I was actually with them when I first joined the Beijing Hualien Group. I lived in Beijing for about 2 years. I was directly employed under the sponsor, running at that point of time was 20 over malls all over China. I was in charge of the mall operations. And again, these malls, you can take a look at some of the photographs over here. They are very suburban-like neighborhood malls that is growing very well in China at the moment. And there's a strong focus on community retail malls and located in areas of high density population. On the right-hand side in green is actually the supermarket business that the group owns. So around the whole of China, they have more than 140 supermarkets. And the positioning of these supermarkets, you can imagine something between an NTUC and a cold storage. And this supermarket is actually the anchor tenant in most of our properties under BHG Retail REIT as well. So again, it's a very popular sector in China where people, go and pick their fresh fruits and fresh produce directly on their own. And a very interesting part of the business that some people may not be aware of, but if you talk to any big brands like Chanel and Hermes and all that out there, they will recognize SKP is actually a luxury department store concept that is under the group. So we have one in Beijing, and subsequently the one in Xi'an opened in May 2018, and in SKP Chengdu opened in December 2022. So if you try to visualize, it's a very high-end luxury department store with your top brands all under one roof. So you have your Hermes, Chanel, LV, Dior, all under one roof and doing very well. And this actually, for a single luxury department store, in terms of total tenant sales, it has always globally been ranked number 1 or 2, with sometimes occasionally with Harrods of England being on top and this being second, or we are number 1. That was during the COVID period that sort of affected Harrods' performance as well. So it is actually very much up there. So you may wonder, oh, this is a retail conglomerate. How come we have very high-end malls and then we have suburban malls? So how does it work in China at the moment? I think what's very exciting is that even when I was posted and living in Beijing back in 2013, I could already see when e-commerce started penetrating the Chinese market. They obviously penetrated a lot earlier than, let's say, in this part of the world in Singapore. So you have your Taobaos and you have your JD.com and all that, very big, very efficient. There's some certain sectors that actually suffered quite badly. They were affected quite badly. What are they? They will be your typical mid-tier department store that sells only merchandise. Or you have your electronic stores. Those suffered as well because you have your JD.com, right? If you place an order by 11 a.m. this morning, you will actually receive the item today on the same day itself. So it was fantastic. I made use of that a lot when I was based in Beijing. So with that, certain sectors actually suffered quite badly. But the group also found out that despite the penetration of e-commerce, there were a couple of sectors that continued to do very well. And they are your very high end, like your SKP, and on the other hand will be your suburban malls like ours as well. I think for SKP, obviously, because the brands is all luxury items, so that's not sold online. People still want to come and feel the whole glamour of this mall, and then to do the purchase themselves and to touch and feel the actual merchandise and to buy on the spot. So that's one. On the other hand, the suburban malls is very relevant, because when people are moving from the rural areas to the urban cities, they will live in areas that's a bit more outskirts, a bit more outside from the city center, because that's more affordable. And that's where there is a need for schools, for medical clinics, hospitals, and of course malls like ours, to cater to the population that live in the area. Because in China, traffic jam is a very big problem. So the government wouldn't want people to be traveling 1.5 hours into town just to watch a movie or to pick up a dress. So that's when they encourage to have suburban malls like ours. Next, I'll go into the investment overview. Bit about China's economic fundamentals. I mean, many of you would have seen the 1Q 2023 numbers versus the year before. Obviously, as we know, the things opened up by beginning of December last year, you know, and the attitude towards COVID-0 had changed as well and progressed. So you can see that China's GDP growth was up 4.5% in 1Q 2023 versus the year before. That gives us a CAGR growth of 7.6%. Another very important metric that we look at as you know, retailers and landlords is the disposable income per capita for urban residents. So we can see that for 1Q 2023, it was up 4% versus the year before, again giving a CAGR, a very respectable CAGR of 6.7%. And retail sales, very important factor that we look at as well, 5.8% growth and CAGR of 7.2% as well. So I think overall we can see that China is on the right trajectory, with obviously the recovery well underway. I spoke a little earlier on the sort of, you know, dense population that we have. So just to share some photographs with you as well. On the left is Beijing Wanliu Mall. You can see that is the mall, the aerial photograph of Beijing Wanliu Mall. And you can see directly surrounding it, especially at the back, you can see a lot of residential homes as well. So these are the people who are coming to shop and to spend their time at our malls on a very frequent basis. A lot, as you can see, is walking distance to us as well. So typically for our malls within the 3 to 5 kilometers radius is pretty common to have 200,000 to 300,000 people who live in the area, who have a very strong sense of a need to come to the mall on a very frequent basis. So people come here. I spoke a little bit earlier on the visitor profile. People, they are typically families who live in the area, coming for groceries, you know, and after work you see more people because they come and drop by and pick up things and buy food. And quite often now in China, a bit like Singapore, people are eating out a lot more than before. So you can see them coming to the malls for the F&Bs and all that. And of course, we have a lot of very interesting marketing activities that's being held to attract people to come to the malls. Some more photographs to show. The left-hand side is Chengdu Konggang Mall. Again, right behind it, you can see a lot of apartments. The right side is actually Hefei Mengshenglu. Again, you can see it's actually located on a fantastic location on the crossroads of two very busy roads, right? And then again, behind that, you can see lots of apartments as well. And Changjiang Silu Mall was the one that we acquired back in 2019. You can see just surrounding the mall itself, we have 50 local communities with more than 200,000 people living there. It's amazing. So again, these are the people that keep coming back to the mall to spend the time and the money. Earlier, I spoke a little bit on our robust occupancy rates. You can see our track record ever since we listed. You can see that as a portfolio, we have been consistently above 93%. Again, this speaks volumes for those of you who are concerned about e-commerce penetrating China. If it's so bad, then you would not be able to see such sustained high occupancy in malls such as ours as well. That leads to a very next interesting topic. A lot of people are often asking about the sort of lease structure that we have in our malls. So we're no different from some of the malls in Singapore, where we are protected by base rents. So, you know, majority, if not all, the tenants have a certain base rent that they must pay. But at the same time, there's X% of gross turnover, whichever is higher. So this means that during bad times, we are protected as landlords because there's a base rent that protects us. But at the same time, during good times, when the tenant does exceptionally well, we also can enjoy the turnover, the cut from the turnover as well. So that's great. At the same time, the next question may come to your head is, do you have inbuilt escalation? The answer is yes, we do. So majority of the leases also come with rental escalation, right? So for example, if a lease is a 3-year lease, on a yearly basis, or maybe every 2 years, there's actually a step up that's built within it as well. So that of course gives us the room to grow our overall revenue. At the same time, if you took a look at the right-hand side, that shows our staggered lease expiries. So we have a weighted average lease expiry based on gross rental income at 3.3 years, and based on the committed NLA at 5.4 years. One very unique thing I wanted to just share a little bit is that in China, typically we look at, we try where possible, if it's a decent, good, quite strong landlord, we try to command to get the lease of between 1 to 3 years, ideally 1 year. Why is that so? It's because we know that it's a very aspirational society. The middle income is growing and people are more and more well exposed. They travel a lot more. So they have expectations towards the kind of tenants that we put. So for example, today, cheesecake is a very big thing, right? This tenant, long queue. But if I come back 10 months later, maybe no longer in, maybe something else is more popular right now. So we want to use this opportunity to refresh our tenants. And of course, obviously to increase rent if we were to retain that tenant as well. I know in Singapore, more often than not, it's a 3+3 sort of situation, tenants sign for longer, but in China, the 1 to 3 years is actually not uncommon at all. And in fact, that works pretty well. Next, a little bit on our assets and performance, solid assets-backed financial position. Our IP as at the end of December is about just over 900 million Singapore dollars. And on the right-hand side, it's pretty amazing when you can see the valuation of our IPs in RMB terms has been growing, and it actually even continued growing despite the COVID year as well. So I think the fundamentals for our properties are actually very strong. A little bit on our gross revenue and MPI growth as well. You can see a CAGR of 6% for both. And obviously in 2019, you will see a slightly more aggressive growth, and that's because of the injection of Changjiang Silu Mall. So I think I spoke about earlier, one of the key things that we are looking at is actually to grow where it makes sense and to inject yield accretive properties in here as well. Yeah, a little bit more on the financial results. So gross revenue in FY 2022 came up to Singapore dollars about 66 million with MPI of about 38 million. AAFD about Singapore 6 million with a DPU of 1.17 cents. A little bit on our capital management. I mean, we're happy to share that we managed to complete our major refinancing in March 2022. So that's last year, we managed to refinance. So we're not expecting any major refinancing until March 2025. So as of the end of this year's first quarter, 31st March 2023, our total borrowings drawn down is about 300 million Singapore dollars. Gearing ratio of 38.2%, considered on the lower side if you look amongst the other S-REITs. Average cost of debt at 5.4%, interest coverage ratio at 2.1 times. Above 80% of our borrowings are denominated in Singapore dollars, and about 50% of our offshore borrowings are hedged via interest rate swaps. I think we spoke a little earlier on the asset enhancement initiatives that we have been holding. I think this is one key thing that we feel our property manager is very strong in. So just to share some examples with you, the top left-hand side, if you look at Beijing Wanliu Mall back in 2018 and 2019, we had Hai Di Lao, the very famous hot pot restaurant, as you will recognize. Then it used to occupy level 4 and 5. So when it was time to renew Hai Di Lao, we wanted them to actually give us back level 4 so we could then cut level 4 into like maybe 3 more units, and then to rent out to other F&B tenants as well. Why are we doing this? I think firstly, we wanted to increase the overall rental per square foot for the mall. Number two, we wanted to increase the variety of tenants that we can offer to our shoppers, right? Based on a very limited NLA that we have. We can't just increase NLA just like that. But we thought what we could do was to right size some of our tenants and then increase the variety. And that worked very well. At the same time, in some of our investor meetings, investors like yourself will say, hey, why didn't you also try to get your anchor tenants to reduce their spaces, right? So we did that. So we did that with our supermarket back in 2020. So our supermarket actually resized and gave us back some very premium good space, and we use that to enhance our B1 as well, to add in a food street as well. So that's worked pretty well. And bottom left, Chengdu Konggang. We had a sports zone in basement 1. So what we did was that even pre-COVID, we noticed that in China, people were very much into sports and lifestyle as well. So based on that, what we have done is that we've put all the sports brands together under one roof. And last but not least, we have, we can see that we have enhanced our exterior as well. I think as a REIT, while we're careful with our costs, we also want to, improve things. At the same time, we've also added container style food lane at the same time. Some more recent AEIs we did in 2022 amidst COVID. Like I said, don't waste a crisis. So we've added one additional entrance to go down into the B1 of the mall as well. And likewise, we in Chengdu Konggang, just last year, we have enhanced and refreshed the offerings outside. I think one of the key things that we have done is that I think COVID has helped us speed up our whole omni-channel retailing as well. So we wanted to have an online presence at the same time. So what we have done is that we had launched our BHG Mall online platform via the WeChat mini program, so that our tenants and our shoppers can access what the mall has to offer on a 24/7 basis. Live broadcast is a big thing in China. So again, it took off really during the whole COVID period. So people could actually showcase a lot of their items as well. And of course, WeChat group, I mentioned that earlier, that's being used in a very big way too. Okay, with that, I will hand the time over to Xian Hao, who will take you through the rest of the presentation. Thank you.
Thank you, Iz-Lynn. Hi, everyone. So the next section will be on our revitalizing tenancies and enhancing experiences activities. So as you can see from slide 25, these are some of the new lifestyle and children's offerings that were included in our portfolio in first Q 2023. We have been sharing this information on a quarterly basis, so you can refer to our past presentation slides on the different types of offerings that were included in the portfolio in the previous quarters. So for first Q, we have seen some local new lifestyle brands such as Coco Art Center, Tmall Musical, and Wenjie Wenqi, and children offerings such as Seven Rainbow Tribes, Uncle Hippo, and the Link Family. Next will be some on the newly created fashion offerings in our portfolio in first Q also. Some local brands such as Via, Zing, and YouCan, and some more popular international brands which you can also find in Singapore such as North Face were also included in the portfolio. These are some of the popular F&B selections that we've included in the portfolio in first Q, such as more local F&B selections such as Jia Bing, Xian Bing Dao, and Scholar Dumplings at Chengdu Konggang and Beijing Wanliu. Next section will be on our engaging communities activities. We'll continue to engage with our surrounding communities through various physical events on a quarterly basis. And the next slides will be those that we shared in the first Q 2023, such as the Heritage Shadow Puppets event at Beijing Wanliu, Chinese New Year event, and Spring Outdoor Market at these respective malls. Next will be some of these children and family activities. Why children and family activities? If you notice in all our quarterly presentation slides, is that all these children and family activities, given the nature of our portfolio of malls, which are all community malls, children and family activities actually brings not only the first generation, can be up to the second generation or third generation to the malls every day. The next section will be on our sustainability efforts. So just some background on our sustainability efforts. We actually started our annual sustainability reporting in FY 2018, and we recognize that climate change has a well-spread and severe impact on the environment that we live in. And we actually started climate risk assessment and scenario analysis in FY 2021 for our retail properties. The more recent annual report, we have also included disclosures in line with TCFD's disclosures. Next one will be some of our efforts in terms of water management and energy efficiency. So given the nature of our portfolio, which are all retail malls, these will be the two main areas that we can really cut down on our cost savings. So in terms of water management, we have implemented practices to control and manage water wastage, such as the utilizing water efficiency flushing systems, installing motion sensor water faucets, all in all to reduce the tap flow rate and to conserve water usage. Next will be energy efficiency. So we have established a lot of energy savings plan, such as those that you can see on slide 33, including the installation of motion sensor base and timely control lights and LED lights. The implementation or installation of LED lights may incur higher capex in the shorter run, but all in all, in the longer run, it does save quite a fair bit in terms of cost savings. The installation of air curtains, strip curtains, given the nature of portfolio, which are all strictly retail malls, that will actually help to keep the mall's interior a bit cooler without requiring a high system output. And the regular readjustment of system output based on actual weather conditions and temperature also minimizes energy wastage. So this will be the part on our social efforts. So over the years, we have also included CSR initiatives at areas where our malls are located in China, such as CNY gift packs to elderly, tree planting program, and also in Singapore, the REIT manager has also held the calligraphy workshop with the visually impaired artists, all in supporting the persons with disabilities. On the governance part, we are proud to share that BHG Retail REIT has been conferred the following results or awards, all platinum awards in 2022, and also in early 2023, such as the best retail REIT, the best investor relations, all in all a testament and recognition of our sustainability efforts. And also is also a message to the investment community that we are here to stay for the long run. Lastly, looking forward, we will remain focused and committed to proactively manage the existing portfolio as well as to pursue growth. In terms of creating organic value, it will be largely what Iz-Lynn has shared on proactive asset management. And in terms of proactive asset enhancement, which I've always been doing, this is to identify opportunities to improve the malls and to achieve better efficiency and higher rental potential. And lastly, in terms of pursuing acquisition growth, where, as Iz-Lynn has shared earlier on, we have completed our maiden acquisition of Hefei Silu in 2019, and we will continue to explore acquisition opportunities, not only restricted to the properties from the sponsored pipeline, also we will look at third-party vendors. So that ends my presentation, and we can then now proceed to the Q&A session. Thank you.
Okay, thank you very much, Iz-Lynn and Xian Hao. I think this is a very comprehensive introduction, as well as a summary about BHG Retail REIT. Following this, over the next 15 to 20 minutes, we'll be having the opportunity to discuss more in depth with both of you about the business of BHG, as well as taking questions from the audience. Now that, let me first start off on myself, which I think there are some questions that I think the audience are quite interested and should help the potential investor to learn more about the company as well as the overall outlook. First of all, we all talk about the pandemic, and now the pandemic basically has been over, but many of its effects are still lasting. So what have you done to combat some of the long-lasting effects and ensure greater overall portfolio resilience of BHG?
Thanks very much for that. I think one of the key things we have learned from the COVID situation is that selection of tenants is actually very important. I think we don't have to look very far. If we just look at Singapore, we have seen that during COVID, there were certain brands that have closed and never come back. Right. So this is one thing as landlords we have learned that, look, because of we have seen what's happened, right? People can just close and say, that's it, I'm exiting completely, right? So we have become a lot more careful as to who we select in future as tenants. You know, some may look very attractive, look very interesting, but if we don't think they can have the capacity to last another pandemic, then perhaps they may not be the most ideal one for us. So we'll become a lot more resilient like that. And I think one of the key things, I think Osbert, was a very good question, that we have also learned is that, I think I mentioned earlier in my slides, is that we realize that the omni-channel retailing is very important. Because what if there's another lockdown again, right? So we realize that actually, to be able to be accessible to our shoppers 24/7 is very important. So that is when we encouraged all our tenants, and of course, as a mall itself, we provided that platform for people to access us anytime. So these are the two key things I would say. Of course, the rest is business as usual, but we continue to grow the business as we go along.
Okay, I see. Is that something like a membership program or something like that?
Correct. Yeah, correct. So first of all, they were already members to begin with. So what we did was they took it to the next level. We had a BHG Mall platform that is built on the WeChat platform for people to actually access all the time. Yeah. That's made a very big difference. But of course, having said that, one very important thing that as landlords we have to realize is that when things started opening up, people preferred to come to the physical mall because they want to spend time in a physical mall. Yeah.
Yeah, that's right. That's correct. And so you have touched on something about the demographic trend as well. We noticed about the increase in urbanization in China and also the aging population. And overall, you see basically the birth rate is coming down, and also the changing in terms of the household structure and increase in household income, something like that. But at the same time, we have higher savings rate as well. So how are these factors all put together affecting the REIT's overall outlook as well as performance?
Yeah, sure. That's a very good point you mentioned. I think with the whole changing demographics, right? Rural, moving from the farmlands, moving to the cities. Therefore, there's a need for a mall like ours. And then we have families, even though China dropped the one-child policy, and then later on they announced you can have 3 children, but take-up rate is still not as high as the government has hoped. Birth rate is still very low, and in fact, in 2022, the growth was actually on a negative side, right? The population growth was actually So basically, with that in mind, we realize that people now feel that there's pressure there. The reason they're also not, having more children, right? And in fact, some are having none, is because they felt that there's a cost of living is on the higher side, and also there's pressure as well. So husband and wives are working. So what we do is that we realize that people are quite often eating out. So for us as a mall, we want to make sure that when we provide F&B selections, we have as wide a variety as possible, and we change our tenants on a more regular basis so that people who keep coming back to eat will not get so tired of the same food. We also realize that people, so quite often they still have only one kid, most of them, right? They spoil the kid, right? They spoil the child. So we have more tenants that have children entertainment, children education, because, it's very competitive over there, as it is in Singapore and Hong Kong, I'm sure. So people want to send them for enrichment classes. So we have a lot of these tenants as well. And of course, as people get older, we also look at our demographics and say, hey, you know what? People compared to 10 years ago, they are still the same shoppers, but they're 10 years older now. So maybe we're looking at items like clothes, right? For more mature ladies, for example, right? We have a selection of that. In terms of our, marketing events as well, we also, realize that, hey, you want to have something for the older folks, right? So we have nearby clinics coming in to do the measuring of blood pressure and all that free of charge, certain health events. So that's how we've been doing to actually keep up with the move. But as an ongoing process, Osbert, so we're going to keep moving and keep changing and evolving as we go along.
Okay, that's great. So I'm quite interested in learning that whether you see a noticeable change in terms of the mix of the tenants before the pandemic and after the pandemic. Right.
Okay. To be honest, not very big changes, but along the way, unfortunately, there were some tenants who didn't make it overall. So they exited completely from being a tenant. And at the same time, you also have new ones that came about, right? Because I think with the pandemic, it afforded new opportunities for people. So we have new F&B that sprung up. We have new, retailers who came about, right? Someone who maybe ditched their previous job and now decided to come into retailing. So we have a mix, but nothing very obvious at all.
Yeah, that's right. Okay. I have actually prepared one question. I'm quite interested in about the ESG, but I think you have mentioned quite significantly and quite comprehensively by Xian Hao in terms of the ESG. So I decided to skip that question. But focusing more, I think, is in now the pandemic's over, and then last year we achieved quite reasonably good in terms of the net property income. So what is your expectation and outlook for 2023? Is it going to be a significant rebound or just a moderate recovery? Or what is your sense about that?
Yeah, I think, okay, as you know, we don't give forward-looking statements, but I think we can tell from the 1Q numbers, GDP growth, we can see that it's actually a very good start from the year before. I think it's actually positive. Yeah, I was in China in March and April, and I could see that it really felt as if COVID didn't happen, because we don't see those booths where they do the testings at all. That was all gone, right? And mask wearing was no longer compulsory. There were some people here and there who were doing on a voluntary basis. So you can feel that things are back to normal. But we also do bear in mind, though, that when the policy came to drop the zero COVID thing, that was in early December. So then that led to many cases of herd immunity happening, right? So a lot of people got COVID. So by the time people really started to recover from the COVID and now going back again was probably potentially in March, April, right? So that's why some of the reports have said, oh, it's not as fast as we thought it was going to be, because it never would have been an immediate thing just like that, because things take time to recover, right? But we're happy that it's on the right trajectory, and we're very happy to see people coming out, particularly the F&Bs. People have realized, I think, that when you are being, subjected to your circuit breaker, or as we call it here, or lockdowns, people treasure the meeting up with friends and family. So that was one of the key things that we rebounded very fast. There was a lot of intra-country travel, so people were going amongst each cities and all that. You can see that happening as well. So I think we are on the right path. Yeah, we're on the right path for sure.
Okay, that's great. Okay, that's pretty much very much organic growth. I saw that you mentioned about your acquisition of the asset from in Hefei from the sponsor. So can you share with us some of your criteria of acquiring new assets? And also, I think there is probably a lot of potential for acquiring them from the sponsor, because sponsor is so large in terms of its asset portfolio. So what are your thoughts about that? Which is going to be a long-term driving factor for the REIT's growth going forward?
I think, first of all, we're very happy that we have a sponsor with a pretty strong pipeline. And I think some of the key things we look at, which I think investors will be very interested in, of course, yield accretion is one thing. We want to bring in something that will make the REIT even better and stronger. So one good example, when we acquired Hefei Changjiang Silu, that was definitely a yield accretive property. Of course, we will look at, we are not looking at just short term, we're looking at the whole long term potential of the asset when we do buy. So obviously, we want to have obviously something which is well located, easily accessible, because we know if it's a community mall, for example, it must be easily accessible for people to get to the mall, in terms of transportation, in a location where you have, robust residents surrounding that. I can see, that was supported. We don't want something that's already perfect, such that I can't add any more value to it, right? So, we want a pretty strong occupancy, right? Strong, may not be 100%, so that we can drive further. Something which has potential for us to do more AEIs on. So these are all some of the factors that we actually do look at as well.
Okay, that's great. I think there are also many other questions from the audience. So I would like to invite Xian Hao, as well as Iz-Lynn, to share with us your view as well. So I'll just ask Xian Hao to try to do the moderator in terms of the audience question. Over to you, Xian Hao.
Okay, sure, thanks. We are taking a look at the questions now. Okay, one of the, just one second, I'll just scroll through. Thank you very much for the questions that's coming in. They're all very good questions. Okay, good. Right, okay. Okay, I'll take the first one. So, okay, so during this is more answering on, okay, the first question I want to take is actually the question is actually this. Thank you for the presentation, super clear and thorough. Any thoughts on Chinese consumers feeding their luxury purchases overseas instead of in the mainland? So I think it's exciting because we, in the past, honestly, as you have rightly pointed out, the preference was to actually fly out to Europe and countries like that to buy items instead of buying it in China. But what's happened is that a few things have actually happened concurrently. Obviously, we know that during COVID, people were not traveling out, right? So they actually had started changing their habits and they started spending and buying things in China as well. Another very interesting thing that's also taken place and is continuing to take place is that the top brands, global brands now, are equalizing their prices around the world. So it doesn't matter where you buy it from, the price is going to be the same. So one example is Rolex is one of the first that started doing that. And the second one is actually Chanel. And my understanding is more and more brands are beginning to do that. So soon it's not going to matter very, very much whether you're going to buy in China or you're going to pay for a flight ticket and go all the way to Europe to actually buy that. So that's why we can see that SKP has been doing very well, particularly during COVID as well. And one more interesting thing to note is that I think we all saw similar news in Singapore recently, where the customs started fining people for coming back to Singapore with luxury items and not declaring taxes on that, right? So China has been doing that on a very big basis right now on all the, what they call the daigou, the people who help people buy things overseas, so clamping down on that. So I think all these are going to continue to change people's habits. And now post-COVID, we see the Chinese traveling within China. We see them traveling to Thailand, right? In quite a big way, but Europe not in a very big way yet. So I think based on that, the habits have already started changing, just like how our habits change. We don't mind staying at home all day now, right, on our off days, and we don't mind buying things online when we never used to. So that's also changed as well. The next question I would like to take is, okay, there's one question is, I'm interested to know how BHG Retail REIT plans to sustain and grow its rental income amidst economic downturns and market uncertainties. I think some of the key things we do is obviously very, very defensive, right? First of all, we want to make sure that we select our tenants who are resilient, that can grow with us, because if they're not resilient, we're going to end up giving a lot of rental rebates for them to stay with us, right? So that's going to hurt our DPU eventually. At the same time, we have also have a very defensive lease structure that protect ourselves during the downside and give us the upside when things are doing very well, right? At the same time, we are also trying to keep our ears very close to the ground to make sure that we stay very relevant for our customers, right? So we are in non-discretionary kind of spending. So people are coming to us for everyday things. So we feel that as long as we stay very relevant to what the consumers really want, we can therefore, keep them coming back to the mall. There's no reason why they wouldn't come back as well. I want to give Xian the opportunity to answer some of the questions. So as we're scrolling through, Xian, we can take over for some of the questions as well.
Okay, yeah.
Yes.
Thank you, Iz-Lynn, for the opportunity. Okay, I'll take the question on does the constant change of tenants also deter both more customers and new tenants? Okay, the constant change on the part, I would think, relating to the shorter lease that we mentioned. This is all the nature and in the markets that we are in, especially for the malls located in all these residential areas. The 1 to 3 lease is like what Iz-Lynn has shared earlier on, is the nature of the market. And the constant change of tenants, I would say the change will be only for those that in a way that is already not sustainable. That's one part. Or second part, there's a need for change in terms of consumer habits or consumer spending. So for us, we work very closely with the property managers on a daily basis. So talks, even property tours are conducted. Even during COVID time, we have online videos to take a look at the performance of the malls to ensure that all the tenant mix are all intact. So all the constant change of this tenant mix is in fact in line with our prudent and proactive asset management, just to ensure that we have the right kind of tenant mix to cater to the consumer needs and behaviors. Yeah. Okay. All right. So one more question will be the part on moving forward. Will the REIT be focusing more on the outer cities as they gain more spending power? Okay. For us, like what Iz-Lynn has mentioned earlier on, in terms of inorganic growth, we will be in the shorter term, of course, to write on the sponsors ready pipeline. That will definitely give us a bit of advantage, because given where the malls are currently already in China, but then that will not be the focus on outer cities as they gain more spending power. We will definitely look at the nature of the mall, the acquisition target that we're looking at, and that is not only restricted to where they are in or whether they are more spending power. But that said, tier 1, tier 2, tier 3 cities have different consumer behaviors. So it is not only the location where it is, but also in terms of the ready catchment, whether there will be opportunities for us to beef up the assets further, that are all in the consideration. Okay, one question is, another question would be, does BHG malls in China take part in live stream marketing via platforms like Douyin? Yes, we do. We have our, as previously shared, there's a picture to show you actually from this one. Okay, so we do organize live broadcasts by internet celebrities through the BHG online platform, and also through various WeChat groups. Exclusive BH Malls, research group, with participating merchants. And just to give you, I guess, the pandemic actually accelerated all these integration between the online and offline platform. So on a normal basis, all these live broadcasts are actually quite normalized. We do hold about 2 to 3 live broadcasts at least at our malls nowadays, accelerated by the COVID-19 pandemic. Right. I guess we are done with all the questions that were asked. Do you have any more questions for us, Osbert?
Well, I think there is also an audience asking about that, whether there is a Singapore REIT that one would benchmark BHG with. Is there anything that is doing something similar with you in Singapore?
All right. Okay, I can take that question. Okay, I would say that no, there's one in particular that we will benchmark with. But then you see, I would guess if you really want to compare, for a normal investor, you will normally look at those REITs within the same asset class, or perhaps even in the same country. So I wouldn't say we will, but in totality, for all REITs, I guess we will look at one another. If there are areas that we can look at to improve on ourselves, then definitely. So yeah, so that in answer is like there's no one particular one that we could benchmark with.
Okay, great. Okay, so I think overall we have a very extensive presentation as well as discussion. We are now almost approaching the end of the webinar, so I think we really had a very good time with both Xin Hao as well as Iz-Lynn. They have basically led investors to have a very better understanding on the strategy as well as performance development of BHG REIT. Do you have any additional things or message want to share with our audience? You can, before we really close the webinar, for example, like any further updates that we want to discuss with the audience. Thank you.
Yeah, thanks very much. First of all, thanks very much for the very good questions that came in. And we want to thank you for your time this evening as well. I think one last thing we just want to say is that, China is definitely one market no one can ignore, on a global basis, right? It's one, So I think, and it's exciting to see it having emerged from COVID, and give it some time. And we're happy to continue with this sort of having more webinars, on a more consistent basis to keep you updated, because we do travel to China on a quite frequent basis. So we're happy to share with you how things are evolving on the ground as well. So thank you very much for your support, and thanks to Smartkarma for organizing the event this evening.
Great, thank you. Then I hope to see you again in your next investor update. And so it is about time to hand back to Sanem to see if she has anything to add. Thank you, Iz-Lynn, as well as Xin Hao. Over to
Thank
you,
you.
Tanem.
Thank you.
Thank you.
Thank you all for interesting questions. And a big thanks to Iz-Lynn and Xian Hao for a detailed insight into BHG Retail REIT, the challenges that you face in the sector, and the opportunity for BHG Retail REIT. I would also like to thank our attendees who joined the session live. With that, I would like to wrap up this week's corporate webinar. Thank you again, everyone, and have a great week ahead.
Thank
Thank
you.
you,
Goodbye.
everyone.
Thank you. Thank
Thank you.
you.
Goodbye.
Thank you. Thanks. Bye-bye.
Bye.